Wondering why Warren Buffett is still not selling this stock? Let's talk about that. Hey guys, I'm the Newb investor. Today we'll be looking and screening KHC at purely financial standpoint through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. And from there, we should see if the stock is a buy or not. KHC is currently trading at $39.73 with high price of $96.65 on February 2017. That's 59% of the highs. Market cap is 48.62 billion with PE ratio of 63.2. It gives out an annual dividend of $1.6 a share, a yield of 4.03% of the current price. The dividend hasn't changed since 2019. But is it still a safe dividend though? Let's look at their payout ratio. With EPS trailing 12 months of 0.82, their payout ratio is 195%. I guess Warren Buffett really likes his dividends. They pay out almost 2 times what they earn just to give investors dividends. You might want to look at their shares outstanding and long-term debt if they're increasing, because you might want to know where and how do they get money to support the dividend if it has been like this for about 3 years. Before we go on with our metrics, which we'll go through very easily because the PE is skewed caused by the very low EPS, we'll look at Warren Buffett's KHC holding. Berkshire owns 26.6% of the company and holds 325 million shares with current value of 12.9 billion, comprising 3.9% of the total portfolio. Berkshire bought it in 2013 for $23 billion. Currently, it's lost roughly 43% of the value, if my maths were right. So if you're buying the stock at these prices and the stock ultimately outperforms the market, you'd easily be outperforming BRK. We'll just breeze through our three metrics. First metric, we want an EPS multiple lower than 3. It's 77.07. Way overvalued relative to its EPS. Second metric, we want to pay $1 or less for 1% of the money they're making. In this table, you'll see the components: R, COGS, OE, NI, FCF. These are revenue, cost of goods sold, operating expenses, net income, free cash flow. The above values are in billions. Below is in percentages of their respective revenues of the years 2017 to 2021. I think KHC could still see its highs based solely on this table. You'll see if we add the average costs of COGS and OE, it is about 80%. And say 5% is lost in taxes, they get to keep 15% to themselves. And if we're okay with paying 2 times of it, it could easily be trading at 30 PE tops. But until we see some clarity with the numbers, I won't be touching the stock for another 2 or 3 years. I could be wrong to say that, but yeah, I will be off the stock for 2 to 3 years, maybe. Third metric, we want to know our discount by knowing how much the markets have valued this company in the past compared to now. We'd see here the lows of 6 PE to highs of 129.24. But we'll use the average to divide the current PE of 63.2, and it's surprisingly low at only 2.18. I think it just means it has been trading this high even before. To conclude, the stock is obviously overvalued based from the current EPS. It didn't pass any of our three metrics, but if I were to buy this stock, I'd buy it below $30 with an assumption of high PE of 10 and assuming that the EPS would go to 3 from the 0.82 that it is now. If you want to invest in these companies, I'd advise you to use a longer time frame of data, like 10 years of data or more. Also, look at their other metrics like long-term debt, current ratio, etc. As always, do your own research.